time, little final hour session. Not nearly as dramatic as what we had yesterday. Just watching the markets kind of calmly make their way back into no man's land. Let me show you the chart here. So intraday price action, another pretty large gap. We've had lots and lots of gaps this week. So our sell off on Friday. So we have a sell off on Friday. This was our high from Friday. I'm not drawing that very well. High from Friday, and end of day close, like at the lows. Futures took Friday a little bit lower, and then we had a huge gap up coming into Monday's open. So futures market ripped from pretty much the Sunday market open into Monday morning opening bell. Monday was a very choppy day, but obviously the recovery was we chewed into about half of this decline, right? So sells off, pulls back about halfway. Then we have a huge gap lower that doesn't quite get to fresh lows. So in fact, what we see is the Friday low gets tested almost perfectly and the market rips all the way up from there. Now, the surprise that I experienced yesterday was we did some, calculated moves, and I looked at this the VIX box that I use, the daily profit indicator that I use. We had a top planned around 66.75 to 66.80, and so this little stall right here ended up being a nice measured move for us. We had to take a stab at this one. I did take a stab at this one, and late in the day, it was just the announcement of, we're going to stop using Chinese oil. So boom, market drops aggressively from, highs at 75 down to 25, 50 points in, 15, 20 minutes. And then what do we get today? Well, another gap higher, and we fall all the way down 67.24, which is only about 40 points away from highs. We fall all the way down to 66.12, over 112 points from high to low. And here we are kind of fighting our way back to the middle. So close, open, we're right in the middle. Perfect for daily profit play. Let the market be volatile, hit your take profit, move on. So traders this morning with me, we had a nice little profit as the market came back down and recentered. We hit our profit target of 30%. If you let price continue for the morning, you would have been threatening the put side, but it came back into profit. So I do want to ask who's out there in a daily profit play holding on to, 3:15 in the afternoon, 3:20 in the afternoon. And if you are, you're sitting in fat profit, full profit for this little time remaining in the day. But again, a wild day to see the call side threatened, to see the put side threatened, and then have the market essentially go nowhere, right? So, the beautiful thing is this is what market makers do best. This is what we do in daily profit play, to align ourselves with those forces that are working behind the scenes tirelessly to make the market. And it tends to work out more often than it doesn't. Okay. Larry says, I held too long. How did you hold too long? How is it not back in profit, Larry? Right. Another crazy day, but how is it not in profit given where we at right now at 3:20 in the afternoon? We're right back to the opening price. Okay. Got out at rebound about $1. Okay. So, are you break even today? Did you take a break even, or what'd you do, man? Again, it wasn't a fun day. Like I was, I was out. Once we talked about the price coming back down to recenter, we grabbed a profit. I think I closed out just after 11 a.m. So profit today closed out by 11:32. So we were in the trade for just over, or just under 2 hours. Where's it at? 9:30. So literally just under 2 hours. This trade, not filling. I'll close these. These are not going to get filled. Cancel, cancel, cancel. This one, that was 15 wide. That's cancel. Okay. So anyway, day was done for me by about 11:30. Added a trade in for Project Options Edge. Took a little ratio spread, and it was actually a kind of a combo trade for Coca-Cola, ticker KO. I let my Walmart shares get called away last week, so I don't feel like buying Walmart at $108. I'm going to Coca-Cola with a 3+% dividend, and I'm going out to some pretty low lows around $50. If I take ownership of Coca-Cola there, fair value is 95. So I'm trying to get it at a discount. Made 50 cents on $1.10, but sweating. Yeah, that makes sense, man. You swing a pretty big bat there with some of the trade sizes you launch, Larry. So I get it, man. Well, any profit is better than nothing, right? Okay, give me one moment here. All right. So anyway, sounds good. Like result wise, you're fine. And the day itself is right back where we started. When the market was rolling over a little bit, I was not surprised to see the market selling off this morning and actually come back to fill the gap. In fact, what did we address today in class? Look, just observe the forest through the trees. Okay. Clearly, last week with this size of a move, it put the market on kind of notice, right? Here's why. This high to low swing was pretty disruptive. It was overdue. It still is overdue, but now we have support and now we have a couple of higher lows. It's very possible, just looking at this price pattern, by the way, this could be a high low swing. This could be setting up in the stock world as far as technicals. This could be setting up another fall ahead. Okay. Now, what I'm going to do is I'm going to adjust my measurement. If we go to this, I'm going to box this in. Check this out. So we'll go from the high on Friday down to the low. Okay. And initially, I thought the symmetry would be down here. You can see this blue line that says corrective symmetry at 6460. I'm going to move this up to have symmetry here. And that would put us up to about 6515. Okay. So let's go 6515. Message is going to be corrective symmetry, 6515. And that's if we get it. So based on what I see right here, this low, if this is market structure, is tomorrow going to give us a sell-off? I don't know. Okay. But if tomorrow lines up to be red or we start to fall, we get into negative gamma, there's room for this thing to be falling through Thursday, Friday. It's a major expiration cycle. One thing that has been a little difficult is you'd think a lot of this stuff can kind of get priced into the expiration on Friday the 17th, but it might be, the market stays sideways all week. There's a major expiration, and then all the hedging gets resumed into, the new month. We go from October 17th expiration out to November, whatever the monthly expiration is for November. Is it the 18th? November 21st is the big monthly expiration. So maybe all the new hedges get put on there. I do think that something big is coming. I don't know if this market's going to blow the top off again. I'm really, really skeptical of crazy upside momentum without having at least another test of that 50-day moving average, unless we are going to do an absolute fake out. If we blow the top off and then we come back down, just get ready for something like this happening, like a broadening pattern where it's going to be tradable, but it's going to be incredibly volatile. Okay. MP, I mean, what channel, man? Where's the scammer coming in? Scammer alert on YouTube. Okay. How? What? I mean, is somebody impersonating my channel? I see way more scammers and crap that's on Discord, but who's impersonating me on YouTube? Anyway, here's what you do. Ignore it. Like, where I'm at every single day. I'm in my live sessions. I'm in my membership groups. I'm running my services, my alerts. I'm on my YouTube channel. I'm in my Discord. I'm in my Telegram. Anything outside of those channels, it's not me. Okay. All right. Stocks usually follow crypto a month later. I mean, you can't say that, Ryan. They have been following crypto as like a bit of a lead for risk appetite, but crypto has not been this mainstream thing. I'm talking about what prices have done for 50 years, not 10 years. So I get it that crypto has been something to watch. Bitcoin, Bitcoin is back down to 111. I'm not saying that it's going to be percentage wise the same, but if we go from high to low, that's a 13% correction. Understand that Bitcoin is way more volatile percentage wise than the S&P, and certainly, even more volatile than the Nasdaq. It kind of, the tide shifted this year when, this little decline that we had early in 2025 was bottoming here in April. The market had already had a decline. but peak to trough, Bitcoin was only down about 31%, while S&P and Nasdaq were down 20+%. So everyone thought this was like, oh, look at this, way less volatility in Bitcoin. Okay, for a one-off move, yeah, I get that the market already rolled over in Bitcoin for the entire first part of the year, right? So it didn't have to drop as far. But here we are, climbing up. It's just consolidating. I mean, what could be uglier would be we have resistance, we have support, we have another, break to the downside. But look at this trend line. I just want us to pay attention to the technicals. I think if one thing I'll give Bitcoin credit for, it does behave a lot like a currency pair. So if you trade FX and you're used to this kind of pure technical stuff, to me, if we have support, 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 if we had a nasty pullback here, a nasty pullback to me is still willing to look at some support around that 80 to 90 handle. And if we come back to those levels and get a bounce off of that, I think that'd be a great spot to bottom out and make our way back up. Right. But it's not going to be without volatility. And if it doesn't go lower and it just proceeds to break the highs and go higher, that's fine too. But my first measure moving target is around 130 to 132. If we get up to 145 or 160, I'm probably taking some profit and trimming back my allocation, because that's going to be about a 5% position in Bitcoin that I initially started with. That's going to probably be worth 10+%. And I don't mind maintaining a 10% allocation, but I have to get some protection in there at some point. Okay. I've got way too much profit running on IBIT and FBTC and even MicroStrategy for that matter. And I'm just going to make sure that, whatever the allocation is, I need to keep it consistent. And also I have some downside protection. Okay. I don't necessarily want to sacrifice upside, so I'm not trying to, I know that it's tempting. Like the premiums are so good on IBIT. The premiums are so good on MSTR that selling calls on those, you can generate some really nice income. All right. But obviously the price appreciation could just run away. And again, if you're in it for income, stick to the income strategy. And who cares about the upside? Just take your income. Here's a crazy example. If I were to buy IBIT spot price of Bitcoin, okay, this is BlackRock's ETF at $63. If I went out for the next month, okay, I go to November 21st. If I buy Bitcoin right now at 63, okay, this would cost me $6,300 in cash. So $6,300 in cash. And all I have to do is sell a call at 63 bucks. Now, is there downside protection here? No, there is not. Okay. So one way I could do this is just aggressively selling calls. And maybe I want to go more to weekly income. So let me see what this would be. If I made $4 out of 6,300, so I make $400 out of a $6,300 investment. That's about a 6% return on my position over a month. Okay. But I have no downside protection. So I have to keep, I have to do something where it's like, okay, I go from a 63 break even down to 59. And then the next month, do I sell another at the money call? Do I roll this thing? It's like, once you start this, it becomes either you've got no downside protection, but you're at least chipping away with some covered calls, which will help you lower your cost basis. Okay. So that does offer some downside protection if over the couple of months, you can get your price from a break even. Okay. You buy it at 63, you sell a covered call that lowers your cost basis down to 59. And from there, you either get it called away at 63 or the thing dumps and you start selling more calls at, 59 or 60 and just keep collecting premium. But you got to calculate your break evens. If I wanted to do downside protection, then I can buy the 63. I would sell the at the money, maybe go a little bit further out, get myself $1.80 on this, $1.80 out of 6,300. So $180 out of 6,300. I make 2.8% of my position. Okay. Now 2.8% on a position that has protection, and you can do this every single month. Okay. That is not a bad way to make 34% a year with downside protection. So if you were in my Gamma report this week with Kane and myself, I spent a lot of time doing some examples on Tesla and S&P or IWM. And, I know it's not the most glamorous strategy to basically get called away at the upside. Okay. But the premium that is offered here for a 1 month out is pretty juicy, if you ask me. If you're going to pull in close to 2.5 or 3% a month with downside protection, that's a pretty good trade, I think. But does that mean I want to be all in on IBIT and that's my only investment? Well, not really. But this is what I do I've got one account that I have in Schwab that this is pretty much what I do. I've got it mostly in GLD, SLV, and IBIT, and I do a lot of this. So, obviously, GLD and SLV have been fantastic this year. So I did pull some of those back, and I'm looking at dollar cost average in once again and starting those positions over, but I still maintain my IBIT. So anyway, there's a couple ways to do it, but I think it's silly right now to have no protection. Okay, because one thing we can look at on the bigger time frame is this market is likely going to have to go somewhere. Okay, and I know that we could blow the top off here and start running to 7,000. I wouldn't put it past the market this year to do it. I'd be very skeptical that we sustain that type of trajectory. In truth, unless we're just going to continue doing the same thing. But I think this market I would hope until now, until like the middle of November or December, if the market's going to end the year higher, I'm hoping that we just get whatever correction the market needs, we get it out of the way. Because the most frustrating correction is when the market just keeps going this way and this way and this way and this way. And all of a sudden it's the middle of December and the market gives back 10 or 20% at the end of the year. That's never a fun way to finish your trading year. Okay. Typically, animal spirits are really high. We've had earnings that we can digest and let the market kind of make sense of, is it up or down, and then we kind of drift into highs for the year. So typically, December is a pretty bullish month. January is kind of a inactive month, but the market kind of has these animal spirits and this new positioning. But I would not be surprised, like February to April next year, we have another pretty decent flush if we're sitting at new all-time highs. Okay. So we'll see. But I think if we have now until the end of the month, or now until maybe that monthly expiration in November, I think that's probably the market at its most vulnerable, because we still have technicals. Look, we still have technicals that I think we still have to have a pullback. This market has gone a long ways, and I know that it can do this. There's no guarantee the market has to go down. Okay. This is why I'm positioning a lot of my, waterfall income. I know it's very noisy intraday. We're doing just fine this week. In fact, so I survived the day yesterday. We had a winner on Monday. We survived last week, right? We made money on Friday. It's like, we're fine. We actually haven't had any issues this week. Okay. The 1014 trade, I did take a loss on, but I netted positive with a couple of trades. Today, I got to add in my new trade for this morning. So 508. 1015 expiration. We started out centered around 66.88. So I'll go 66.85. So we did what was our trade this morning? I think we had like a 100-point wide trade. So my dollar this morning, so 67.30. 67.30. By 67.35 and the 66.30 and 66.25. So 5 wide, pulled in $1, closed out for my 30% take profit. Yep. Okay. Let me catch up on some questions here. Chris, I really want to try a collar trade. What's a good ticker for collar trade? Doesn't use much capital. Mike, if that's your question, I mean, IBIT is a really good. I mean, I think it's great. It's not super expensive. It's $63 a share. A collar trade gives you downside protection. I know it's going to be volatile, but here's my narrative on Bitcoin. On Bitcoin, so BTC, if we end up dropping, let's say down to 100K, or down to this support line, which is around 90. I mean, low 90s, or even into like the high 80s. I mean, that could be a really ugly claw to the downside by another 20%. It still doesn't change the market. It still doesn't change the structure. This is still bullish. This is still bullish, even if we drop that much. Okay. Now that drawdown of maybe 30% is going to sting. It's probably going to be a fleet of safety. You might see the U.S. bond market get a bid. I don't know if gold and silver will still act like they've been acting, but I do wonder what happens to the dollar or bonds or things like that. Okay. So anyway, if I did this on IBIT, it's not a bad trade. If I went month to month, I think that there's enough time there to get a window where if price falls and falls aggressively. I mean, here's what's kind of nuts. If I did this on IBIT, Okay. And we're trading at 63. If I buy the shares at 63, I sell a 65. Okay. So I sell a call at 65 and I buy a put at 60. So I'm going to do +1 at 60, right? So here's my call. Here's my put. If this thing drops, let me find the trend line here. If this thing drops, you can ride this put down with it. And you can also take profit on this covered call, reestablish a position from here. And now, do you want to put another collar trade on, or you just want to have, look, I just lowered my cost basis by $15 a share. This thing's down peak to trough 30+%. I mean, you can go out a little bit farther and up on the call side, and they maybe go a little bit further out on the put side to finance that thing, still have some downside protection, but give yourself maybe $5 to $10 to $15 of upside and maybe let this thing go. If it gets back to all-time highs, then, getting a break even around, like, let's say $48, and it runs all the way back up to $72, now you're making like 50% return on your investment. So, I mean, the thing with the collar trade is whatever you commit to, do the math. You own the shares, you sell your call for premium, you buy your put for a debit. Make sure it's a very light. I would say you want to make sure you put a collar trade on. I like the collar trades for credits. I don't like to pay for collar trades. Okay, if I'm going to put protection on, I want it to be free, and I essentially want to be kind of dollar for dollar with the asset. So if we drop, I want that instant protection. All right. But what I was saying in that Gamma report about the collar trade is if price drops, okay, if price drops, there is a point where I'm not necessarily as interested in protection because, case in point, I mean, look, we could have this conversation on Bitcoin and everyone says, oh, it's going to go up for, I mean, people say $1,000,000. Okay, maybe it does. But what if it doesn't, right? What if this is our Bitcoin trend and this thing falls down here, okay, bounces, and then falls all the way back into where it started? That, I mean, it would feel terrible if you didn't have downside protection, right? But here's what you can always do. You can always get back in. If I can if I can still generate 2 to 3% even with a collar trade, and I can do this every single month, that's a hard premium to argue with. That on your position you can get 2.5 to 3% every single month and still have downside protection. I think that's pretty impressive. So if done right, and it's going to take some simple math, it's going to take some consistency. Obviously it's going to be part of your investment is in this basket, so it's going to be on IBIT, but you want to watch this closely, right? But if you are going to, move the collar, move it together. If the put is in profit and you want to take that profit on the put, then close out your call, take the net difference, do your math, calculate new break even, and put on another collar trade and use it as an income vehicle, right? I don't mind having a position here where it's like, look, I'll put $1,000 in Bitcoin. If it goes up to the moon, I'll let it ride forever. If I risk $1,000, it can go to literally zero, and I'm only risking $1,000. That's literally been my plan on Bitcoin since inception. I've been in Bitcoin since 2016, 2017. It's always been risk capital. Since I have made enough money over the years with it, it is no longer risk capital, right? Like my all in on Bitcoin is probably 20 to 25K. That has turned into over, 6 figures of gains over the years. So it's not just risk capital. Like I'm not comfortable risking $250,000 on Bitcoin unless I have downside protection. Then I can invest in it, but not just let it ride. That's crazy. Like if Bitcoin has a 50% drawdown and I'm down $100,000+, that doesn't feel good. So I don't want that, right? I want to have that downside protection, and I know that I might cap my upside, but there's still ways to generate the income that I'm looking for. Okay. Was VRT a pinch point trade? Yes, it was. We looked at it this morning. It's still in profit. We're looking to see if this thing will stay. I mean, we're up to 180. We need it to be above like 130 or 150. Let me double check VRT down here. We need it to be above 160. So right now we still have about a 71% chance that this will stay fully in profit for us. We do have a take profit sitting. Okay, it's still sitting. And what is a little disheartening is that we have the mid price showing better than our credit. It's just not filling right now, and that is unfortunate. So let me see. I'll try this again. I did it this morning. Can we get out of here? I mean, I hate to take a lesser profit, but we're up about 55%. I'm going to try to close this thing down for, I mean, if I accept the three, let me see if I can get 365. So 375 maybe. 365. I'm just trying to at least, if I can get at least get $100 out of it, I'm okay. But we're clearly not getting the fill that we want. The bid ask is pretty wide. I'll try one more at 355. I'm not going to go lower than that. I think it's silly. I think it's silly to take less money. 355 is not filling. So, I mean, look, we're only out 37 days. I think we give it over the weekend. I think we, maybe see our levels get hit. So I'll put the take profit back up to the original 50% take profit, which is 382. Okay. And I'll see if the broker can get me filled. All right. What else we have here? Got a question. Do you have time? I want to place a long-term bet on the dollar rising more, the S&P the next 1 or 2 years. I want to get calls for it. Yep. That would actually be that would be my, my choice of asset would be UUP. If you like the dollar long, UUP is a great way to trade it. Yep. So, getting long here and looking to see if the dollar rises, that's a good looking trade. Whatever you're risking, if you did a call option, especially, make it define risk, and the most you can lose is what you put into it. So yeah, I mean, it's funny you say that because I do think that this dollar at some point, like we either have this as a corrective move, and this is going to set up for another more permanent secular bear market, or we are going to have the big surprise of the year, which is going to be the dollar keeps going higher, and everyone's trying to fade this thing, and this becomes the overcrowded short trade is now going to become the short squeeze uncovering, and you've got to unravel those dollar shorts. And that could be a really interesting like middle finger to everyone that's been shorting the dollar and swearing that the dollar is going to lose its world reserve status and its permanent bear market. That is a really surprising trade if we get it. But the amount of short covering that would have to happen here, the dollar could get very strong very quickly, and that would likely lead to the breakdown in gold, the breakdown in silver, the breakdown in Bitcoin, the breakdown in the stock market, possibly the rally in safe haven flee to bonds. Does it hinge on the dollar? I mean, there's still a lot of support here and there's a lot of resistance here. So this dollar technically has not really broken structure, people, right? Like if you look at this support, it is in a multi-year range. It has not broken structure. In fact, if anything, this may be setting up for a head and shoulders that if we break the neckline, there might still be room to the upside. So that could be a really interesting trade to see. Like, okay, gold's been hot, silver's been hot, Bitcoin's near all-time highs, but volatile. S&P, Nasdaq, Dow, Russell, all at all-time highs. What's the surprise trade right now that not a lot of people are talking about? Stronger dollar. So this to me is getting out of the the crowded trade into maybe the contrarian trade. So we'll see. I mean, but I think that's a pretty good asymmetry if you ask me. Because if the dollar starts to run up, it's probably going to run pretty hot. And it might move, way more aggressively and way more stubbornly than we think. So that could make things very interesting. Yeah. But like I said, define risk. If you give yourself, if this thing runs to these highs, I mean, you would hopefully get 3, 4, 5 times your money on that trade. So if I put in $500, I can get 5 times that. Put in. Oh, my dog is slowly dying. You all right? Hey, come here. Hang on. Somebody have a dog that reverse sneezes? Hey. Oh, there it is. Give me 30 seconds. Okay, you're good. Sometimes he's impossible. All right, what else we have? I'm seeing a lot of people escape the dollar, but to me it looks informative. Yeah, I mean, like I said, I think it does look like a good technical trade where this thing's based out. We've had support here since 23, 24, and again in 25. Everyone's talking about how bearish the dollar is, but I think this is the surprise move to the upside. Also, it does make sense that gold, silver, this debasement theme is becoming so popular right now that I don't know, man. I think this is where you get a lot of potential alpha or a lot of potential like profit that nobody really sees because it's been such a bearish trade. Did we get an AAII print today, by the way? 10-8. So not yet. I'm curious what this prints for tomorrow when we start looking at markets tomorrow. We've had a steady run from 28% bullish now to 46% bullish. The bears have been retreating since, the 40s now into 35s. So are we more bullish at these tops? I don't know. Okay, time will tell. Rather the short, yeah, I think that's good too. Long the dollar, long the dollar with defined risk is a lot better than short in the S&P. Absolutely, because look, the S&P, if we pull back 5, 10, 15, 20%, somebody's waiting with the put. Like it's either going to be a Trump put, a Bessent put, an administration put. It's going to be a Fed put. It's going to be a something put. It's going to be something that like backstops the market. The U.S. truly can't really afford to do this tit for tat game of chicken with China. China probably can't afford it either. It's like everyone says like, oh, China's playing the long game. And I've said it too. It looks like on paper, when you have absolute power and authority, you can do whatever you want. We don't have 2-year cycles, right? We have 2-year cycles, 4-year cycles. China has absolute authority to do whatever they want. And this, rare earth mineral stuff and the leverage they're seeing, they're not buying our farmers soybean. It's like all these things they clearly have leverage when it comes to commodities, right? And there's more and more of the outlier risk in the fray of like the BRICS, the threat to the dollar, and the threat to the U.S. The U.S. economy is greasing the entire wheels of the world. So even if you think, well, the U.S. is going to underperform, sure, but it's still super liquid and it's a lot easier to trade than everything else. So and again, if I just had to be a buy and hold investor, I wouldn't enjoy trading really anything right now. But because I can at least invest in a position, trade options around it, I can at least generate some income. I can lower my cost basis. I can see some prices gain. I can get some direction, obviously, one or the other. If I trade my pinch point scanner, for example, okay, pinch point scanner can literally find trades that are likely going to move. We are probably getting direction with every trade I see in pinch point scanner. Within 30 to 60 days, we're going to get some direction. That direction is usually what gets me paid either direction. I don't care. This is why I go after conservative targets. I put in a position that has the potential to pay us close to 100% return. And we can be wrong on one side, right on the other side, and we can still make up to 100%. So setting a take profit at 30 or 40 or 50%, which is what we do, that's how we hit an 84, 85% win rate. Because price is likely going to move. It moves up or down. We don't care. It shouldn't matter to us, but volatility goes somewhere. The market has to do something outside of go sideways and nowhere for, weeks on end. So anyway, there will be trades like that. There will be trades where it's like stuff will move. There's always going to move in the stock market. You're always going to chase. You're never going to find all your perfect needles. So I'd say that the haystack, you buy the haystack versus trying to find the needle in the haystack. The S&P is going to find a way to go higher through hell and high water. The Nasdaq, same thing. They're both going to be volatile. They both have their flushes. When the system gets over leveraged, here's what scares me. Literally today, I read this online. There are now 5x leveraged ETFs. 5x. 5x. Okay, there's 1.5, 1.5. Look at this crap. 5x long Nasdaq. 5x long Nasdaq. Are you effing kidding me? That type of leverage getting put back into the system, that type of leverage getting put back into these highs, that will blow up at some point. So I think that's why we had a lot of the rotation early this year, is everyone was long last year. We've had 2 back-to-back 20+% years. Why wouldn't you be long, right? 5x leverage is absolutely crazy to me. I'm not saying you can't make money doing it, but not my style, man. I think there's plenty of ways to generate income safely with way less risk and way less drawdown. Just be careful on this stuff. But I just read this today. So 5x leverage, man, that's a lot. 5x S&P, 5x leverage on the Nasdaq, single ETFs for certain. I think like Mag 7 stocks have them as well. So just be careful. All right, what else? What's up, Jay? How are you, man? Jay, yep, that's what I have. I got a Frenchie, little Benji boy. He's an old man now. He's 7 years old. Trade war getting petty now with charges being applied, docking cargo ships. I know, but look, man, none of it really matters until price decides to go somewhere. None of it matters. Here's where we're at for the last couple weeks, right? This has been nothing but a steady melt up. Here's my concern on the bigger time frame. Okay. We finally broke structure for the first time since May. Okay. So to me, and again, I'm looking into like the granular details here on the technical side, but if we are breaking, this was support and support and support, and it supported there because it was a fake out trade, and then more support. We finally broke it, right? So we break this. This swing takes out a month worth of gains. Okay. Now I'm not saying that's a top. I'm not saying that we have to go down lower, but the reality is this structure finally changes if we're zooming into this current price action. To me, I think this market may not be able to really sustain a much higher high without having an additional drop. So look, you take this low to this high, you just put on some really simple pullback levels, 10, 15, 20%. If those are hit, we're probably going to find some support there. Okay. In the more near term, we find a correction that gets us into, look at a symmetry play. I've already got it on the chart here. High, low, lower, high, lower, low. If we hit symmetry, we're going to be right around 6,500. Okay. Do we have another lower high, lower low? That pullback happened in 2023, happened in 2022, along with a 10-month pullback. Okay. But it happened in 2023. We had a bit of a pullback in 2024. July to August was a 10% correction. We had a 5% correction back in April of 2024. This year, the only real correction we've had of noteworthiness would be Liberation Day drama. March to April, market dropped 15% in a couple weeks. So are there 5X puts? I don't know. Probably. I'm sure there's inverse ETFs that are also, I know there's at least 3X leverage. There's 3X leverage inverse ETFs. So it's essentially like being leverage puts. You just buy the inverse ETF and go triple leverage. Again, I don't like those trades at all. You've got to be so right with the timing on those things. They pay extremely well. Like, look, a triple leverage move, if you got it nailed, right? You crushed it. Okay, a triple leverage ETF would have paid you close to 9%. Question is how much money you're putting into that? Because you're playing with fire. Like, the market doesn't like going down. I'm sorry, it doesn't. You can clearly see that. I showed this today. I posted this in Telegram today. Look at this stuff. How President Trump moves markets with True Social. The top chart is S&P. The bottom chart is the VIX. Right? I mean, look at this. This is March, April, May, June, July, August, September, October. 1, 2, 3, 4, 5, 6, 7, 8. We're talking 8 pivotal events between volatility and S&P that are just bottoming out the market and topping out VIX, topping out volatility. But it comes with the threat of something and then the immediate backpedaling, which is why the phrase this year that was created was the taco trade. It still happens. It literally happened over the weekend. So just a lot of stuff, man, a lot of noise. And, like I said, if I'm getting a little bit more into the granular details of the technicals, if we go high to low, if this is setting up any type of corrective pattern here to sell back off, the big clue that we have overnight is going to be futures. If futures runs with this potential push, then we'll be opening up tomorrow lower. And if we open up tomorrow lower, do we have what it takes to get down through this low, possibly into symmetry? And is there a bottom there? Maybe, maybe not. But look at your correction levels. Okay. 3, 5, 7, 10%. Those are all very realistic, and they don't really change the integrity of a bull market at all. You start getting 12 to 15%. Yeah, that does a little bit more psychological damage. That hurts sentiment a little bit more because usually that 12 to 15% comes very quickly. But if it's like, okay, we had this high to low, market pulls back, and we have a peak to trough of maybe 5%. Let's say we hit symmetry on 65. If we hit 6,500, we're talking about a pullback of just under 4%. The market's up 40%. The S&P is up 39+% from the bottoms in April. The Nasdaq's up over 52% since the bottoms in April. A 3, 4, 5, 6% correction is nothing. It's just a hiccup. Okay. But you've got to be braced for some volatility. And, like I said, I am, and I'm still open-minded about maybe the market going to all-time highs. As much as I wouldn't like to see it, because I'd like to see a correction I can position for, having the market go back to all-time highs is still very valid. And all we have to do is come in and see this, this every single day, positive gamma, positive gamma, positive gamma. All that means is sell puts, sell calls, price just does this. More often than it doesn't, price just does this. It's slow, it's choppy, it's steady, but it just stays supported. Okay. What do you think about ETFs that offer 25% yields? I think you're going to find yourself break even on them because the stock is going to go down. The price itself will just go down. There's always a catch, man. There's no way you can like ETF 25% yields. What is it? It's probably just a covered call based ETF, right? I'd be very skeptical to see that actually performs well. If the market is sideways, it probably does fine. If the market is down, you're going to play some catch up, but you're going to be down overall in the asset price. But those by I think like through every monthly expiration, just read the fine print. But you're going to see that most of those type of ETFs or type of yield max, those yield max assets will basically, you know, perform the same as just selling a put on the original asset that's not repriced every 30 to 60 days. So my personal thoughts, I don't love them. I don't love them. I don't think you're going to get much more out of it than just like selling puts and trading the original asset. It's just layer upon layer upon layer upon layer upon layer of derivatives. You take an asset. Think about this. This is the market. Take an asset. Okay. That asset's supposed to have a finite number of shares. But what do we do in options? We have unlimited contracts that can be traded, right? So you take this one asset and then spin it off into, well, here is a leverage version of the asset. Here's a 2x leverage version. Here's a 3x leverage version. Okay. And then you put options on top. It's like all this does is it waters down the integrity of the original asset. And this is unfortunately like this is Wall Street at its finest. Do you know how many ETFs have been created in the last like 12 to 24 months? Hundreds and hundreds and hundreds of ETFs. Why? Because financial advisors love them. Oh, you want to be an AI? We'll find an AI basket. We'll find an AI ETF for you. Okay. Oh, you want to be in this? There's a basket for that. There's an ETF for that. You know. So I mean, look, ETFs are great, but there's so many of them that just do your homework because ultimately it all points back to you're still in the S&P, you're still in the Mag 7, and everyone's pretty much invested in the same thing. So if the Mag 7 stumbles, falls, it's going to drag everything with it. Okay, we're so concentrated. 40+ % of the gains this year in the S&P, 40% of the 15% net that we are at this year has all been because of Mag 7 earnings. So it's a highly concentrated market. So, all right, we're coming into the final minute here. It was nice to not be staring at this thing, like we did yesterday when we came into that final hour where it's like, yep, I need price to be below these levels. But something to watch for overnight is this structure going to be meaningful going into Thursday, Friday? Does the market come back down to revisit lows? Does this market try to sniff out all-time highs again? I don't know. Okay. It might also be a nothing burger where we have this high, this low, and we're still trading inside this chop through Thursday, Friday. Okay. But I would be more sensitive to this market if it catches a bid to the downside. If we go into negative gamma, we're probably going to face that correction I'm talking about. We'll get to that 4% correction. We'll get to that 5% correction. Maybe it gets a little bit more volatile, makes things more interesting at 7, 8, 10%. Okay. Let me make sure I'm getting all the questions here. Any other thoughts, concerns, questions? Let's just do a little top down here. So market finished green on the day, mostly because of the gap that we created. Here is the intraday price action. So today, I'm trying to think what is this indicator? Oh, this is my daily profit play. Okay. So daily profit play here from the session. Here's a good way to look at it. That was my symmetry move. Here's the day. So we closed yesterday, closed today. There is your plus 40% or plus 0.4, right? The day opened higher, went higher, faded a bunch, neutralized. So we're kind of came back to equilibrium. Now, this is what's kind of nice about these days. Everybody sees green. If you're just, seeing a Bloomberg TV screen or watching CNBC or you're just checking your phone, you're like, "Oh, market's up today. That's cool." Nobody panics, you know. We will see. Resistance all the way up to 67.70, support around the lows at 65.50. They're up for the taking. Do we test and reject? Do we test and bounce? Right? Do we go neither direction and just stay here for the rest of the week? No inflation data, no non-farm, no news. Government still in shutdown. If I'm not mistaken, today is an official pay period for the federal government that is apparently not getting paid. So essential workers not getting paid, right? I don't know if there's back pay. There should be, but I'm thinking that there's rumors now that there's not going to be. Does that hurt sentiment? Maybe, maybe not. Watch price. That's all I'll say. Watch price. That's the most important thing. Okay. What would be the early indication the markets are going to pull lower? I mean, we've been staring at things. I've been saying the crap for a month. It's exhausting to be like, I think we're going to have a pullback. I mean, this market will think about it this way. If you want to be a much better trader and much better emotionally equipped to handle these markets, this market will push you to the thresholds of pain and discomfort and uncertainty unlike anything in your life. Okay. Look, this indicator is one of my favorite indicators of all times. Overbought, 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 overbought with divergence. This thing went 400 points higher. And it also did it for 3 straight months. So as soon as we printed here, we had a little pullback in July, and it still proceeded to go from that high in July up another 5%. Yes, we had a pullback here of about 2 to 3%. We had a pullback here less than 2%, less than 2%, less than 2%, less than 2%, less than 2%. We finally had that pullback here of about 2%. I think high to low is about 3%. That's it though. And it spent months doing that. So as I was anticipating some highs, look, traders that were in my daily profit play, I got very biased here through September. I was getting very biased trying to sell almost every single day. I got burned once or twice the entire time, but I finished fine, because it's harder for the market to have that crazy upside thrust versus the downside drop. So usually if the market's going to go up, it's going to be slow and steady, and it might, still get to some of those extended moves that might exceed the expected, and the actual is greater than the expected move. But based on what I do in daily profit play, it's rarely going to go past our extremes that we have, like the VIX box or the 100 to 200% ATRs that we watch. So if we know that ahead of time, there's some backup plans to help mitigate some of that risk. But most of the time we are winning. Right. So anyway, it is really just it's a big coin flip. Here is resistance. Here is support. I think the market on the SPY, the Qs, and I think they still have to find the 50 period. So a little noise goes a long ways. This is a high that clearly the market cares about right now. And this low, it's noise inside. Does it break and double? Does it break and double? So here's what I will say. Okay. Before we officially go today, let's box this bad boy in right here. Okay. And let's look at a potential breakout. I just don't want us to be surprised if the market is going to actually go to some type of measured breakout move. There's a breakout right there. And there's a breakout right there. Okay. So I'm going to eliminate the noise, see if we have a breakout one way or the other. This was a potential gap fill that I was looking for. I can delete that now. But if we break and go lower, symmetry to measured move, I mean, we go anywhere between 6,500 on the breakout side for symmetry, and my potential high-low breakout move gets us to about 6,340. I mean, to me, that's healthy, right? To me, that is a 6% correction. It shouldn't change anything about this market, but I think it would be a lovely pullback for us to see. Okay, unemployment claims scheduled. Are they? Are they? I think it's tentative though, right? Nothing's been, I mean, it's been tentative for like 2 weeks. So here is your data for tomorrow. Nothing. I don't see anything at 8:30 in the morning. There's no data. Today was tentative. Okay, it was all Fed speakers today. No news. Unemployment for Aussie tonight. Thursday, no news. All it's been removed. Friday, nothing. So, I mean, from what I see, nothing is popping up. Oh boy. When is this? 3 hours ago. World Bank to end support for China. Okay, man. It's the immovable object facing off against the unstoppable force. Number one, number two going at it, tit for tat. Just buckle up, man. This volatility is going to be something. I'm hoping the volatility is look, get a flush, get a correction, and we figure it out. Keep in mind that in the middle of November, there should be an APEC summit where US and China are going to be talking. I would think that talks should be constructive because here is the reality. Here's what's at risk for the US. If we want to play hardball going into any type of negotiation, you remember this gain that we saw from April to now? All of it is in question. Literally, all of it is in question. If we do not repair this narrative with China and this gets way worse, we are going to see this whole thing will unravel. And it's not because it should, it's because it's so ridiculously built up and so frothy at these highs, it's going to be a crazy deleveraging. Okay. I think if Trump wants to absolutely lose all hope of a midterm win, then he plays hardball with China. Otherwise, he backpedals, and as soon as something bad happens, we backstop it with positive news, just like we did last week. So if the market comes a little bit lower, I think there's a backstop there that we maintain this bullish structure. But I'm saying, like, do not be guaranteeing the fact this market, I mean, it should go higher, but this entire rally could completely unravel if we go back to this narrative right here. If this is what we talk about, which is we're cutting everything, we're cutting programs, we're going to trim the fat, we're going into austerity. This is, US first and isolationism. If we want to do that and tax the world and tariff the world, all this is potentially going to fall. And AI and stuff gets put on hold because it's going to be about a flight to safety, and all that stuff gets built back up later. Nobody wants to see that. Okay. So I think that there are plenty of safety nets in here or plenty of circuit breakers in here that will keep this market supported. And it's in the US's best interest to keep it doing that. It's in China's best interest to keep it doing that. But I don't know. This is a, global game of chicken that apparently we're playing right now. So I think it's a lot of noise. I think somebody swerves and eventually the market finds its way. But right now we are stuck between a couple of key levels. Watch from Friday structure and see how the rest of the week unfolds. Tomorrow could be noisy. Friday could be noisy. We could still be in the middle of this range. We can go back and test the lows, come back and test the highs. Just watch price action. Okay. All right. I'll let you go for today. See you tomorrow. Tomorrow morning, 9 a.m. Eastern time. I'll be live. Okay. Training Thursday. We'll see what's moving. Really not a lot. There's some, today was a pretty interesting day overall. FinViz heat map. So the market finished 52% advancing, 45% declining. Again, not led by Mag 7. Chips did pretty well today. We've got semiconductors up, software, semiconductors, computer hardware. Other than NVIDIA, we had some, Intel was up 4% today. All this is good. AMD, Micron, all these are up. Micron is 190. Good Lord. Wow. I've got some ratio spreads on it. I took a bull call spread that was like 300% profit. Crazy. I love a pullback. Anyway, all right. I'll see you tomorrow. Thanks, everybody. Bye.